Crypto markets remain volatile while NFT sales are surging. Are we seeing a decoupling underway? Welcome to the Daily Forkast, January 27th, 2022. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Well, NFT trading volumes have gone through the roof already this year, while cryptocurrencies continue to struggle. We're going to take a look at the divergence between the two markets and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with some of the top stories coming out of Asia today. First up, Russia's finance ministry has opposed calls now from the country's central bank to ban cryptocurrency outright. Just last week, the Bank of Russia issued a report which recommended a comprehensive ban on crypto-related activities, describing crypto as a pyramid scheme. Well, the ministry's director of financial policy responded by saying, hold on a second, a ban on crypto transactions and mining could hamper the country's growth in the industry. Now, President Putin has since waded in, saying the two need to come to some kind of unanimous opinion on the matter. Now, Russia joins a growing number of countries debating the issue, with India just one example, where local media reports that another delay to its crypto bill is likely. Meanwhile, over in South Korea, media regulation agency is stepping up efforts to prevent sexual harassment in the Metaverse. A council launched by the Korea Communications Commission will discuss violence, sexual crimes targeting minors, and other pressing issues on the Metaverse. The move comes after cases were reported of children and teenagers being lured into sending photos and videos of themselves, with the images being used to create sexually exploitative content. Now, the current law prohibits adults from inducing sexually exploitative conversations with minors. However, violations are occurring in the Metaverse. Meanwhile, lawmaker Kang Sung-woo has spearheaded amendments to the law with a draft bill proposing that platform operators should be held more accountable and mandating immediate reporting of any violations to investigative agencies. You can find those stories and more at forecast.news. Over in the markets, NFT sales have had an explosive start to the year, while crypto remains a sea of red. Now, are we starting to see a split developing between the two? Forecast News' Lachlan Keller reports.
Leading NFT marketplaces LooksRare and OpenSea have seen record sales this month, with $12 billion worth of transactions between them so far this year, while the total crypto market cap has plunged almost 30% at the same time. One expert told Forecast News that while investors are taking risk off the table in the crypto side, there hasn't been a corresponding pullback in NFT trading volumes as a result of buyer profiles changing.
People who are buying NFTs are interested in culture and art. People who are buying crypto are interested in solely an investment or a risky asset. So we're seeing buyers diverge.
Kalpu says more unique buyers are getting into the market, and crypto, or Ethereum in particular, being down is acting as an incentive.
Lower real prices are affecting it by giving it more demand. So people find it more affordable to get into these collections if the real dollar value is less.
Jonathan Miller of Kraken agrees that the two are very different marketplaces nowadays, with an evolution underway.
NFTs are detaching from the rest of the kind of crypto space when it comes to pure, financial services type infrastructure. NFTs have their own, their own drivers, and we're seeing that play out in the early months of 2022.
Miller also says that the NFT market works very differently to crypto because people make bids and offers for sales that they don't expect to be accepted immediately, using smart contracts that are costly to modify, while crypto moves in a more fluid and dynamic way. For Forecast News, I'm Lachlan Keller.
Digital currencies have had a grim run of late. We've seen Bitcoin and Ethereum lose almost half their value from all-time highs, while Solana has dropped over 60% from its peak, leading, of course, to plenty of questions about the stability of cryptocurrencies. This as the Russian central bank has proposed a complete ban on crypto mining and trading. So how are all of these developments shaping the new economy? Michael Wu, CEO and founder of Amber Group, a leading digital assets platform, joins us once again to answer all the questions. Good to see you, Michael.
Good to see you, Angie.
Well, Michael, many analysts are closely tracking ETH to Bitcoin ratio, which has started to fall and is being viewed as a sign of vulnerability of ETH to swings in risk appetite. What are your thoughts?
I think the keyword here is indeed risk appetite. I mean, even among the crypto asset class, Ethereum is on the higher risk spectrum than Bitcoin because, of course, it's shorter history. It's more dependency on its utility and the growth of ecosystem versus Bitcoin is consensually already seen as digital gold or storage of value. There's very little challenge to that. Now we are sort of in a sell-off and risk appetite has been pulling back on concerns of central banks' monetary policies, on inflation, on Fed's potentially hiking 4 times this year. We discussed all of this in previous sessions, and because of that, I think portfolio managers, traders, asset allocators tend to flow back to the safer end of the assets, which will benefit Bitcoin among all the cryptocurrencies.
Well, to rub salt into the wounds, let's talk about geopolitical risks here. We are seeing on-the-ground escalation between Russia and the Ukraine. What risks does that pose for crypto markets, you think?
First of all, I just want to say it's very sad that whenever this kind of geopolitical risks happen. Now, secondly, in terms of its effect on crypto, right? Of course, the volatility itself, right, will shock all asset classes, and in this case, I think equity markets have been reacting to that, and as well as crypto as as an investment class or as almost like a risk asset in that case. On the other hand, long term, I actually think these kind of geopolitical uncertainty, without specifically talking about this case even, I do think further strengthens the narrative that we probably need a more decentralized economy, or at least a economy that's less dependent on global geopolitical powers.
Right. I mean, Russia is a fairly important player in the crypto world with about 10% of all global mining taking place in the country. How worried are you about their central bank's proposal to halt all crypto-related activities?
In the short term, of course, I'm following closely to it, as I think active investors or traders should be regarding these significant geopolitical events. But over time, we have seen, Bitcoin or the crypto economy is very resilient to any single geopolitical shock or any single region's regulatory policy, right? As you mentioned, Russia now accounts for maybe over 10% of the global mining hash rate, but China, before its restrictions on crypto mining, used to account for over 50% of Bitcoin's global hash rate, and Bitcoin is just doing as fine after the restrictions came out. So I'm not too worried on that. Frankly speaking, I think being the decentralized network it is, Bitcoin will find its way to thrive.
Absolutely, it is. After all, the new economy, and these rules are ever changing, as are the standards that are shifting as well. Michael, thank you so much, as usual. And that's the Daily Forecast from our vantage point right here in Asia. And you know what I'm going to say to you if you're watching us on YouTube. Hit like, hit subscribe, hit that alert button, because it helps us grow our audience. It helps us reach more of you. And that is absolutely the goal of 2022 for us. Visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.